Hello and welcome to Macro Mondays presented by the Goxstein News Network. Today is September 8th, 2025, and I am your host, Landy. We're going to be talking about Bitcoin, Ethereum, and Solana today, mainly Bitcoin, but we also are going to talk a little bit about how important this week is when gauging what the Fed might do next week. Because we have very important economic data that's coming out this week in the PPI or Producer Price Index and CPI Consumer Price Index, which we are going to get numbers for on Wednesday and Thursday of this week, respectively. And, this is where coming off of kind of labor focused information, economic information that came out last week, well, this is the inflation focused week. So, the market right now is bidding the treasury auctions on Tuesday last week, and usually on Monday. It was just a holiday last Monday, but they're bidding as if there's going to be a 25 basis point cut, and that's pretty powerful, all right? And this is where, they're based on some of the economic data that came out last week regarding jobs. Many are kind of predicting that it's almost a certainty that we will see a cut next week at the FOMC meeting. So I'm still maybe 60-40 that we see a 25 basis point cut in September. I know the market is basically pricing in 100% prediction for a 25 basis point cut. And now we're seeing that many are coming out making a prediction that there could even be a 50 basis point cut. I think that a lot of it is going to hinge on the inflation data. Now, if the inflation data comes in line with the expectations, which let me go ahead and show you what the expected is. For core inflation, the forecast is 3.1. Expecting to see that same metric, inflation rate year over year, is expected to tick up by 0.2 points or 0.2%. And month over month by 0.1%. And then, of course, core inflation month over month remaining the same. Now, this is information that I'll probably detail on Friday, because that information, Wednesday we'll see the PPI data. I'll cover that. That's going to be month over month producer price index. I'll talk a little bit about that. Maybe even start diving into the numbers, just to give you context, not to just dive in and baffle you with bullshit, but to actually show you hey, this is where the data is, and give you my take on it. But the biggest thing is the market is waiting right now. And the market's kind of in a holding pattern right now, even though we are seeing things like gold take off and silver take off. In fact, gold is hitting weekly expansion. Maybe we'll touch on that some point this week. But biggest thing is very important week. This week is inflation focused, whereas last week was jobs focused, right? And I think it's still probably like a 60-40 decision on a rate cut next week from the Fed. And the market is definitely pricing in a rate cut. And I'm just going to show you pretty quickly. This is the 13-week treasury auction. So pricing in about a 4.03 on investment rate, and the 26-week coming in at 3.854. So what this is telling me is that, along with secondary, that the market is fully expecting a cut next week, right? And that is a powerful signal. And that's one of the main reasons why we see a lot of the predictions coming up at just about an assured rate cut. The problem is the Fed has a mandate between two things that are going in the same direction, trending in a not positive direction. And that is inflation, which is heading up slowly, and then jobs, which is heading down in terms of kind of directionality. And, if you cut, that can spur inflation, but it can boost jobs. And if you hold, then you can hold inflation, but it can still tick up. And then it could have some negative repercussions for jobs. So the Fed, like I said last week, is between kind of a rock and a hard place. And we'll see what they do. I think it's maybe a 60-40 kind of a, maybe 50-50 kind of coin flip, kind of moving to a 60-40 for next week's meeting. I'm pretty bullish on a cut in Q4 if we don't see one. But one of the major things is if the market is pricing in a cut and we don't get it, well, we're going to see some major volatility and likely to the downside. And if they do cut over 25 basis points, let's say that that 50 basis points, number that keeps coming up now in the past week and a half now, that would also be a shock to the market and probably provide for some pretty big volatility, likely to the downside. Now let's take a look at Bitcoin. Bitcoin's swing trend is up, and we actually have a closing higher low here. And one of the things that we want to see after getting a closing higher low, so swing trend, you can see the downtrend clearly here. We got a swing lower high to swing higher low to swing higher high. And now we have a swing higher low with a closing higher low here. I wanted to kind of point this out because we do have a setup. This could be considered a reversal setup if we start to see closes back above around 113.5. Some charts it's going to be around 113.6, but right here it's 113.5, kind of the close open right here that was retested before testing lower in that downtrend here. Now it's still a downtrend with a higher low trend reversal setup. We just need to see a trend break and then continuation to higher highs. And that would be pretty good for the bulls, but they got a lot of work to do. So let's go ahead and turn on the local support and resistance areas of interest. And that is going to be Bitcoin's kind of right around the top side of that prior weekly higher high swing, which is at 112. Now we did get a slight close above it, but we needed to see, as I mentioned Friday, we need to see push past around that 113.5. That is now where the upper first standard deviation of the Bollinger Band set is here. Now, of course, there is the purple area here, this white, these two white horizontals, and the yellow zone here is the weekly close. That last weekly higher high close prior to the one that's up here on the weekly was at 109 to 112. Bitcoin has kind of been playing in and around this range quite a bit. Obviously, we did get a sweep of the low to this daily level, this complex higher low, and consolidation prior to pushing through that 112, what was the prior all-time high, to make a new one. Use those dailies over there, these dailies over here, to then push up and go on to new higher highs, 123, 124.5, thus fulfilling our targets between 123 and 125 up there. Now, this is still a bullish setup as it stands on longer term timeframes. I know that many are getting very bearish here. But we don't have any confirmation of a trend change on the weekly, which would be way down here at 101 to 98, 225. Now I say way down here, but Bitcoin can make moves in a very, very quick manner, and just be aware of that to the downside as we go on throughout this week. Now, if Bitcoin does trade below the lower first, I'd be looking right to the lower second, right in that daily zone, right around 107 to 108. You don't really want to see closes below there. That would be expansion into the next area where the lower third is, right around 104 to 105, maybe even a swing down to that 1272 fib extension there at right around 103,650. Anywhere below there, it's game on to go and test the 101 to 98,225, which was the last weekly higher low. Now, in this case, like I said, I need to start seeing with this close here. By the way, this came on bullish divergence. There is some bullish divergence off of this close. We do have momentum pointed to the upside. So what we want to see from here is we want to see a trend break on closes above 113.5. Technically, on spot here, it is 113,480. Next big area to look up to, if we do start seeing Bitcoin trade above like the upper first, 113.5, would be right around 114,750 to the 115.7 where the upper second standard deviation is. Remember, this was the really big important area. We saw the swing down below it to tap this swing, and then the close and breakdown that led to our 112 and then filling out these other areas. Now, if we do start to see closes above 115.7 to 116, you can kind of call it a primary zone of resistance, right where we saw this big lower high after, Bitcoin put in a higher high and put in, essentially a swing lower low with a closing equal low. We saw a rejection right here, right? And this rejection was right in this key zone between around 116 to this 117, 800. You can call it 116 to 118. I need to see closes above there, but bears are still in control all the way through this green zone. And that's going to be 120 to 121, the top side of this tighter range up here by the highs. Above 121, that's where shorts, I think, are going to start spilling their positions, because they run out of cover, right? It could be, even on a wick basis, could hit the highs again, even if it got rejected. They'd have to readjust. I think to push shorts out, we got to see closes above, right around that 120 to 121, and preferably above 121. Otherwise, this is a primary area of resistance right there at 120 to 121. So you want to see 115.7, 116 reclaimed, and then you want to see Bitcoin reclaim that, 117.8 to 118 to have a chance to go and try and push those shorts out. But be aware, even if we do see a move back, we see a downtrend break off of the higher low, trend reversal setup that we have that's going on here. Just be aware, even if it regains 118, bears still in control, in my opinion, all the way up to that essentially top side of the green zone at 121. Need to see it push above there, and especially close above there, to start running back to the highs again, 123 to 125. I think it might take its time, though, because this is approaching, a compression above the upper second. That'd be expansion into the bottom side resistance here by the upper third, and a break above would be expansion to the next big area, 121 to 120 to 121. Now, anywhere below the lower second, like I said, that'd be expansion into the next big area of support, this higher low over here at 104 to 105. Anywhere below there, then it's expansion down to 103.5, 103.7 here, and then continuation of expansion on closes below there down to the big weekly area at 101 to 98, 225, or you can just call it 98 to 101. Just be aware that we need to see the trend reversal setup, complete with a trend break above 113.5. That's really what you're looking for the bulls from here. And, momentum's to the upside here. We have a bullish divergence. We'll see what the rest of this week holds. Let's go ahead and get rid of the mess on the screen here for support and resistance. Let's go reference that weekly as well. So weekly above the basis band and back in compression. Now, we did see that right around 123. Be aware, even if Bitcoin does spike back to the top side and work its way up there over the week, the upper second standard deviation is right at that high at $123,000. We do, however, have the upper third if it does want to push through the all-time high at 124.5, $125,000 area. Beware of swings above there that hit 125 even. But above there, then we're starting to look 128 to 130. Now, that's a call that I've had for quite some time. It's a major 1414 Fibonacci extension from prior cycle and local structure. So that would be an area to look at as well. And the basis band is something we want to see closes remain above this week. And that's going to be right around 110 now. If it is lost and we do see price move down further, we do have right around that it's a 1272, I think it was. Yeah, 1272 is that 113.5, 113.7. That's where the lower first standard deviation is. So it could save itself there. But we see that although if it moves down further than that, it endangers this last higher low in the weekly. Again, I know that the swing structure is now a downtrend, or a trend break on a swing structure, not a downtrend, sorry. Trend break. This is a complex high and a close. So this is just a higher high and a close. Swing trend is broken for the weekly, but it's mean reversion back to the basis here. Just need to see the bulls hang on here essentially and not close below this last higher low at that 101, 298, 225 here. We do have the lower second just below there for emergency swings, but swing trend broken. Have to be, especially diving deeper, have to be aware of lower highs on the way back up. And potentially more downside, which would be, on expansion anywhere below there. Bulls want to see expansion on closes above 123 to go test 125, and then close above that to confirm expansion up to the 128 to 130 by the upper third. So, this is now getting to the point where, I've mentioned this before, and I'm going to show it here on video because I've talked about this on stage. A lot of people talk about red Septembers, and I just want to point out that for this bull market, after the higher lows came in over here, August, we had, the higher low set in a September green month. We had another higher low coming out of we had a red August and a green September, thus setting the swing low here, which was another higher low, or resulted in another higher low, right? And now here we are yet again, a red August, and the September is typically what we've seen is kind of the first half of September has been kind of slow, maybe downside, fishing some more for the lows and stuff like that. And then back half of September, moving back up, right? That's actually what I would say you want to see repeat with this current bullish trend on the monthly. And we'll talk a little bit more about this. I know that Septembers are typically red, and even for traditional markets, they're red. But for Bitcoin in this particular structure, from the lows of last cycle, we have seen green Septembers, and it would be something to pay attention to if this was a red September. Just wanted to put that out there because I know that a lot of people are making, a big deal about Septembers being red. But just understand the context of kind of where we are, and that the bulls do have a chance here earlier in the month. But it would take a little while. Like, they're not just going to march all the way back to the highs without closing above, that 115.7 by the upper second, right? We need to see that getting closed above and then get expansion. And it's probably going to get some consolidation and some structure being built. So it may take some time, even if it does remain bullish. Just watch that downside. Now, realistically, you need to watch 109, 110, just like we were looking at on the longer time frames. We need to watch that area because that would be a, like, let's say today closed below 110,600. This would be a lower high swing, right, with a lower high, kind of a higher high close, lower high swing. And if it takes out the trend reversal setup on a close, then it's likely going to go back and retest, 109 to essentially that daily at 108 to 107. We have to be aware of that lower second and possible expansion down. So just be aware. If you're bullish, you want to see 113.5 closed above on the daily and start working its way back up towards that overhead resistance. Let's go ahead and check in on the Ethereum chart here. I know Ethereum's still consolidating last I looked today, and it is in the same zone, even rejecting directly off of that 43.84. This is now going to be the area that we need to see it close above 43.84, set a low, and try to resolve this little consolidation on the low side structure back to the high side structure above 4,500. Above 4,500, we can start looking back to 46, 46.30, and then back into the zone around the all-time highs. And realistically, I think, even though structurally it would be ugly, I think that Ethereum's safe, above 3,900. Again, it's the same as last week, 3,900, 3,930 down here. You don't want to see closes below there. Otherwise, I think Ethereum's safe, and in a consolidation, which you might recall is exactly what I've wanted to see for the bulls. Just don't give it up, bulls, and you have a shot at the highs and potentially resolving a range structure and compressive structure after an expansive structure to the upside here. And then Solana, I think Solana's also starting to push through some of the areas that we had previously talked about, and has even resulted in running its higher high structure up here, that we were talking about last week. It did get to that one, essentially, it was looking for like 218, 220, but got to 217. So I got a little front run of that, but another higher low, anywhere below this upper first and the 210 region, it's still safe to come down to like 203, 202 by the basis, but you don't want to see 200 dropped realistically. Could it swing it and still be safe? Technically, yeah, but it would increase the odds that it kind of starts to turn or roll over. But as long as we see closes technically above the 199, 34 here, 200 area, then it's still fine. Otherwise, it's down to test the next area at 195, and you're below there, 190, so on and so forth. Could save itself around the next bigger area at around 185 to 187. But then it's realistically the bottom side of this larger zone of interest around 180. And I'm looking 220 to the top side. Above there, I'm looking 225 to 230, and that's That's essentially where the upper third is. And you definitely want to see that if you're bullish. You want to see closes above the 218 and especially 220 to get that expansion up towards 225, 230. And then, really start stretching the structure out so that it's got some safe pullback zones and lower term time frames. But looks fun, looks good for right now. We'll see what the rest of this week holds in terms of economic data. And I don't know if that's necessarily we're going to see it play out on the charts first. Just be aware of lower term time frame volatility. But I think direction is going to start setting up for some of those, for some tests to maybe try for the upside a little bit further. Just be aware that, I think it's decision time after the FOMC. So we could see some this hurry up and wait kind of a, absorb the economic data that comes out this week and then hurry up and wait kind of a posture from the markets. And I did want to check on one other thing. I mean, gold definitely taking off. That ain't waiting for nobody. Dow. I wanted to double check because I checked it earlier at close. Yeah, this is hurry up and wait. Hurry up and wait. Still good structure here, even though it is ugly for the dailies on NASDAQ. And then SPX, is a bit of, it's still in the bullish half, right? And it's really below for like SPX or SPY. It's really going to be below, your 643 or 64.30 for SPX. Depending on what it is that you're looking at, you can just use SPY. It doesn't matter. I think it is going to be a little bit of hurry up and wait, as you can see early in the week here. We'll see how that rolls through. And of course, I'll talk to you all about it on the Wednesday check-in. And I'm going to wish you a wonderful morning, afternoon, and evening. No matter where you are in the world, please trade safe. And of course, as always, stay safe. And please like and share this if you find this information useful and help get the word out. So we can keep having good discussions about this stuff. And I hope to see you back here on Wednesday. So with all that said, take care. Landy out.